it's very clear that the U.S. Chamber has not supported the imposition of tariffs, not just in the context of China. We'd like to see it addressed with Mexico and Canada, and of course with Europe as well. Tariffs are a threat to our economy. They hurt our farmers, they hurt our manufacturers, they raise prices on our consumers. So we're concerned about tariff policies. But at the same time, we very much back the administration's effort to tackle the kinds of issues I addressed earlier and need to be tackled. There is not a level playing field in China's market, and this is an issue that is long-standing, as you suggested. Clearly, if you see a rise in tariffs from 10 to 25% on the $200 billion, and if we were to see down the road additional tariffs, that would be a big problem. I think it would hurt our economy. But right now, we got to get focused on how do we get the two governments back together. There's obviously a distrust on both sides. We've got to find common ground here, and we've got to work to encourage the two governments to get back to the table. And right now, the earliest that's going to happen is at the G20 meeting. I hope it happens earlier than late June, but that's the next time the two presidents are actually due to get together.
Myron, can you give us the view from the factory floor? To what degree are we seeing even more margin pressure for your members? And anecdotally, are you hearing that they are now having to postpone capital decisions until they get greater certainty on what happens with the supply chains?
Well, Sri, it's good to hear your voice again. Listen, no one likes uncertainty. Business does not like uncertainty, and this is a period of some uncertainty. So until we see these negotiations get back on track, I don't think you're going to see companies make short-term decisions. The market of China is critical to U.S. companies. It's going to continue to be critical to U.S. companies. But clearly, people are going to hedge their bet. They're looking at alternative supply chains. But I would caution against overreacting to short-term fluctuations in the market. We've got to look at the long-term trends here, and there are real serious issues with China's market behavior. We've got to address those issues in these talks, and we hope that they can be constructive and mutually beneficial. But at the end of the day, if the two sides are not talking, we're not going to have progress. And if we don't have progress, then the markets are not just going to be nervous, the economy is going to suffer. That's the fundamental reality. But we have a strong economy and we're resilient.
And are your members, Myron, finding those alternative supply chains in Southeast Asia?
Well, look, some companies have made those decisions anyway because of cost of labor and other factors. But I think at the end of the day, China is a big market for a lot of companies. You need to sell into that market. A lot of companies are manufacturing and investing there, and they want to continue to do that. Are we worried about the trends right now? Of course we're worried. But at the same time, we got to keep our focus, again, at getting the two governments back to talking. There's an impasse right now. We know that 10 days ago they were on a different track. They got to get back on track and have a more constructive tone, and they've got to work on the solutions that will get us out of this mess. A long-term trade fight between China and the United States doesn't just hurt the United States and Chinese economy, it hurts the world economy. And so everyone's interest is to see the two presidents get together and see whether their personal rapport can help us pave a way for a deal ultimately. I'm still bullish on the prospects of a deal getting done. It's not going to get done in the time frame we had thought it would get done, but I think ultimately we're still going to get a deal done. Just high-stakes poker right now, and both sides are going to have to figure out how to blink together.